live option trade alerts for August 2024, August 1st, solid opening. This trade is showing us around a $700 profit. New opening trade, B plus grade. As a spread for the 430, you can sell the 440 and buy the 420. This was on SPY, and we picked up $288 of credit. Picked up around $900 for the 1 DTE trade. S&P down 76, VIX up 13.6%, and VVIX up 18%. August 2nd, S&P is down around 80, VIX is up around 14%. Then I give some options regarding Amazon. Here we picked up $860, S&P down 100, VIX up around 25%, VVIX up 23%. August 5th, we rolled the 5130 down, and then we picked up $951. This trade has a large trap of around $2,000 per contract. As a spread for the 385, you can sell the 400 and buy the 360. Here we sold some put options on TLT for around $2,600, and that was used to finance 5 of the debit call spreads on TLT. Then I give a proposed spread leg. Here for SPX, we close out the 1 DTE and then sold tomorrow's strike, the $200 cushion, reduced the size from 5 to 4. We picked up an incremental $1,200. The good thing is that when volatility spikes, it's pretty easy to roll the 1 DTE trades. The reason I'm selling it early in the day is that volatility is up 80%. At one time, it was up over 100%. It's more likely than not the volatility will contract, even if the market continues to go down, unless it goes down in a panic. So that's why I wanted to sell the volatility early, and that was exactly what ended up happening. Here we roll down one of the 175 put options, financed it by selling 4x of the 177.5 calls. As a spread, you can sell the 172.5 calls and buy the 182.5. But you don't want to sell too many calls. There's a tendency for the market to bounce back quickly. So roll one of the positions and then be patient. S&P down 160, VIX up 65%, and VVIX up around 27%. After hours, the market is up 46. Then here's the long message that I sent. August 6th, new opening trade on RTX, and then also on SPY, 2 new opening trades, a short-term SPY hedge, sold 4x to the $10 wide, 510s by 500s. For RTX, more sector rotation, this is a bullish play. Here we bought back one of the SPX puts. SPX picked up around $460. And then we also closed out the 5390, so we bought that back. Picked up around $450 of credit. S&P up 54, VIX down 28%. Then this is the message that I sent, August 7th. I'm surprised at the strong price action. Sold some SPX calls. Closed them out, then resold. S&P down 40, volatility up, but not much, which is a good sign. At one point, the market was up around 90, and then it closed down 40. SMH. Here we bought back the August 30th 205s, and then we sold the 247.5. This trade was definitely a mistake. Market is up $73 at the moment. Maybe a good opportunity to hedge. SPX call picked up $120. S&P up 120. VIX down 14.6%. Solid opening. S&P down 12. Let's see how the market trades later in the day. Here we picked up $50. S&P up 25. Volatility down around 14%. August 12th, S&P is down around $10. S&P about even. Not much activity that day. August 13th, S&P is up 39. It's about $16 off its high. S&P up 90. VIX down 12.5%. Today's price action was extremely strong. That's 4 straight days in a row where the market was up. August 14th. New opening trade is a spread. I'd sell the 100 and buy the 90, B plus grade. SPX, 1DTE, picked up $50. S&P up 21. VIX down over 10%. VVIX down 5%. August 15th, new opening trade is a spread. I'd sell the 160 and buy the 150, B plus grade. There's been some pinball action in the market. Rolled this. It got a bit too close to the 55.50 strike. I need to address the SMH position as well. Waiting for a pullback day. It's rare that the market crashes up. We may have to close that out for a loss and make it back with other trades. S&P up 88. VIX down 6%. We may have to close out Amazon and SMH. August 16th. New opening trade, B plus grade, is the spread for the 135 put. You can sell the 140 and buy the 125. S&P up 11. VIX down around 3%. August 19th. New opening trades, B plus grade. For SPY, if you want to sell the 450 as a spread, then you can sell the 475 and buy the 460. Then I give the spread suggestion for Amazon as well. Bought back Amazon, close it out. Bought back SMH, close it out. So yeah, we took losses on those trades. S&P up 54. VIX down 1% and VVIX down 4.5%. August 20th, the market is attempting to increase for the 9th straight day. New opening trade in NVIDIA. Then I give the spread suggestion. S&P down 11, VIX up 8.4% and VVIX up 3%. So large increase in volatility for a small decrease in the market. August 21st, new opening trade. Be careful with the sizing. S&P up 24, volatility up as well. August 22nd, S&P is about even, VIX up 2%. Here's a new opening trade, B plus grade. Then I give the spread suggestion. Picked up $80 in SPX, S&P down 50. VIX up around 8%. August 23rd, S&P up 64. Volatility down around 10%. August 26th, new long-term trade in Amazon. S&P down 18, volatility up around 1.5%. The 27th, S&P down around 20. VIX is up over 3.5%. New opening trade, picked up around $227 of credit. Just a friendly reminder, do not trade too many contracts. The problem with that structure is that if VIX explodes to 50 plus, then the naked puts will show a large loss, even if the strike is not close to being challenged. S&P up 9, volatility down. August 28th, S&P down slightly, VIX up over 1%. Nothing to do right now. I'll monitor the market and check back later on. Picked up around $205. for SPX. VIX is spiking. Wanted to sell one strangle while volatility is up around 15%. I may sell one more at closing. This isn't the safest trade because if the market falls another $50 over the next 2 hours and VIX spikes above 20, then the credit will balloon up over $5 as opposed to the $2.05. Even so, it's a decent trade. Sold one more with a much higher call strike. S&P down 33. VIX up over 10%. Very large increase in volatility for a small decrease in the market. August 29th. S&P up around 36, volatility down around 11%. Close out the short call. 2 new opening trades, one in NVIDIA and one in IWM, both B+ grades. I probably like the NVIDIA one more. Then I give the spread suggestion. Picked up around $40 a credit, S&P about even, volatility down around 8.5%. August 30th. New opening trades, B+ grade. I sold puts as a spread because volatility is currently low and these trades have a relatively long duration. As a result, I want this trade to have upside potential while also being protected against a volatility expansion event. If this trade gets challenged, I might roll it to naked and then take ownership. New opening trade, B+ grade. S&P up 56, volatility down around 4%. And that's it. So if you have any questions, leave a comment below. Also, you can join our live option trade alerts at beststockstrategy.com/memberships. It's only $19 for 7 days, so you can take the trial and enroll now.